Paris INFRAWEEK 2024. I'm here with Tom Ceusters. Tom, hello, thanks to be here. You're Director of Treasury, Capital Markets and Investments at the International Finance Corporation. Can you present us the International Finance Corporation?
Yeah, thank you for having me. So the IFC, so the International Finance Corporation, is the private sector arm of the World Bank, exists since 1956. So we have the same mission of alleviating poverty and increasing prosperity in emerging markets, but we just focus on the private sector. We have a balance sheet of about $100 billion, and we're active with boots on the ground in about 105 countries.
Okay, thanks a lot. You've launched the GEMS, the Global Emerging Markets Database. What can you tell us about it?
So the big announcement is making it more public as a public good, because the GEMS database, so the Global Emerging Market Database, exists since 2009 as a partnership founded by IFC and EIB, the European Investment Bank, has grown as a consortium of 26 members. So today we aggregate credit data for about 15,000 loans, 10,000 counterparties over the last 30 and 40 years. 40 years for public governmental investments, and 30 years for the last 30 years for public and private investment. So a wealth of information. We call it a treasure trove, with historical data on probabilities of defaults and also the recovery rates of our collective investments of the multilateral development banks and development finance institutions, which are bilateral institutions formed by one country, just like KfW in Germany, FMO in Netherlands. So that data has been released and made public, such that the public and the investment community can take a look for themselves, calibrate their risk models, and come to the conclusion that, one, the recovery rates are higher than what is generally expected, and the probabilities of default are much lower. On average, it's 3.6%. And so that goes against the overall conception or misconception that investing in emerging markets is much more riskier than in developed countries. And so that has been released under the pressure of our shareholders after the G20 Capital Adequacy Framework Review. And we've been working over the last year to make that data available. And we hope that it will mobilize the private sector to come and invest alongside the MDB community, because it should be a lot less risky than what is thought before. Second, we also shown that there's not that high of a correlation with developed countries. So if you look from a portfolio diversification perspective, adding the right amount of investments in emerging markets could protect and make your overall portfolio more stable than just if it were in developed countries. So those are the two conclusions and the announcement that we made 2 weeks ago. It's all on the website of the GEMS database, the consortiums. The last step that we're working on is making the data available to a data provider, so that people can really play with the individual data themselves rather than looking at relatively granular reports that we provide now on our website.
Tom, thanks a lot for coming.
Okay.
Have a good day.
Thank you for having me.